Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to be doing our daily technical analysis update of commodities. We're going to work our way through the DXY, which is the dollar, yields, precious metals, and commodities and ETFs that I follow. If you guys need help with anything, or if you want to find out how I'm playing this bull market, where my purchases are, what the prices I got, what companies I'm buying, you can sign up to finding-value.com and you can follow me doing my transactions and where I'm buying it, what sectors, what individual companies, etc. You can also see what we talked about last question and answer session. It's all recorded and put onto the website. So let's dive in and let's see what's going on with the markets, and I can give you my financial opinions. So let's start with the DXY. So we've got the DXY here. We were up today 0.2% or so. Is this going to continue higher, or are we going to roll back over at this resistance area? What I would say is, generally speaking, an increase in yields or in interest rates is going to bring that dollar DXY higher. It's going to invert the yield curve. What could invert the yield curve? More inflation, higher oil prices, higher commodity prices. So that is a driver. Commodity prices look very strong right now, and yields could go higher. So the DXY has been pretty resilient here. So let's continue to look at yields and see what they're doing. The 2-year yield, this is a difficult read on the 2-year yield. Why do I say that? We've got strong selling pressure here, strong selling pressure here. And usually what I see is I see small little candlesticks all coming up that are weak, that generally want to roll over, that are inside a strong selling pressure move. So if we were to kind of back out and look at like a weekly candlestick, you can see it more distinctly. This is a bearish engulfing, another bearish setup, not much of a big bounce here, another bearish engulfing that generally works its way lower. But that's on the 2-year yield. If you zoom out and you look at the 10-year, the 10-year still looks very strong. And this still looks like to me that we could go higher, nice big bullish candlestick there, small selling pressure. Everything's still kind of holding together all right. And TYX, the 30-year yield, still looks great. We have a break to the upside of this pattern. We still have strong candlesticks. Yields still look strong to go higher. So those all make things kind of confusing. We got the DXY at resistance that could roll over, or is it going to punch through based off of these yields? And that's something we're going to have to watch the next few weeks. Why does that matter so much? Yields is what prices assets. That's why. TYX TNX ratio. This is the inversion. The curve uninverting, the curve inverting. Oil stocks bottomed here and went higher. Gold stocks bottomed here, went all the way up. Gold stocks peaked in August of 2020, which is the peak right here. That's when they peaked. They came on down, and then now we're at a very low level. If the curve starts to uninvert, basically it's a slowing of the economy, interest rates start to fall, we'll see this go on up. To me, this looks like a very good opportunity for gold and silver down here. The curve could uninvert. But I don't see too many signals on the actual yield curve that is going to for surely happen. I like to see an alignment. So again, we're low. We're at a very low level. The curve is inverted. And this is generally a good time to be buying gold and silver sectors. But at the moment, we are still down here, just basically moving sideways. TLT bond prices, this is another thing that we can look at to see where yields may potentially go. Bond prices move inversely to yields. As yields go up, bond prices go down. When we look and we zoom in, this still looks like, to me, that bond prices could go lower. And we're coming back up to a resistance line going across here where we could come up and just get rejected and come back down. We also have a strong selling pressure move, then the buying pressure bounce. So to me, it looks like we could go lower in bond prices, higher in yields. Gold up $6 or so. It's been moving around. If I was trading short term, you buy the breakout here, and I would be selling on this move there with that right on the big bearish engulfing. and I'd be waiting for a more distinctive move. But big picture view, it still looks fantastic because we're sitting on top of all the patterns of support that would signal a higher move in gold. So yields are, in 1970s, gold went up with yields going up. That was a scare against the currency and bond market. So people shifted money into precious metals. Are we going to get that same type of dynamic coming up? I don't know. We're going to have to watch it and see. But right now, I'm kind of indifferent on gold in the short term. Longer term, higher. Silver up 1.7%. Again, we got this monster interest rate day move there. We've come on up. Are we going to still bounce around here? Difficult to say, but long-term view, you move out. This is a breakout. I think we're going much higher in silver. So over the next few days, we'll see how it kind of plays out. But from this perspective, this looks like a very strong chart. We've broken this downtrend line, and hopefully we can hold up there on a monthly, quarterly close, etc. And I think we are going to rip at some point. Platinum also breaking its downtrend here. We've been just kind of moving sideways recently. I still think we're going to see buying pressure eventually in this where it rips higher. We usually see that in inflationary environments, increasing yields, and platinum has been, at least historically, very correlated to oil. Platinum's an inflation-sensitive asset, just like oil is, and they are very closely linked together. XAU to gold ratio, gold and silver mining companies, which is XAU, ripping to the upside here, 1.92% of outperformance against gold. So looking very strong here. We could break this downtrend line at any time, signaling a downtrend is broken and that gold and silver mining companies are going to outperform gold. I think that's coming soon. Looking at the CRB index, CRB index continuing to rip higher. It's broken out of its pattern. It is starting to run. Run, Forrest, run. Going to go higher. CRB to S&P 500 also broke its downtrend. Run, Forrest, run higher. This is wave 3. What does that mean? Wave 1 is your first initial kind of wave that breaks out of this whole thing. That's wave 1 with that arrow. This is wave 2 pullback, which is generally the biggest pullback. And then you get what's called a wave 3, an Elliott wave. So we're going to get a 3-wave move. And then we'll get another consolidation, and then you're going to move higher like that. So that's probably going to look like what wave 3 is. It's going to be a big move. Maybe this consolidation zone occurs in this resistance area. And then you get one last kind of blow-off spike at the peak there. And that's probably what it'll look like, something on the lines of that. And it's already underway. There we are breaking out. Go commodities. GDX, GDXJ. So GDX is in a flag pattern still. GDXJ is also, you could put a flag pattern here if you want. And then SILJ is up a lot. It's also in a flag pattern, but this looks good to rip if it wants to. Again, I don't get to determine the timing. Some people say, well, what about 6 months, 8 months? Guys, you won't know that. You're just going to buy it when it's cheap, hold on. The precious metals are all on top of their patterns. We're just waiting for yields in the markets to rotate money into it. Crude oil up 1.6%. This is broken out to the upside, looking fantastic. This looks like it can continue. It doesn't mean that every single day will be an up day. It just means that we're going to continue to grind on our way up. Natural gas, we're outside of the flag pattern. Looks good to go higher. There we are, putting in some roundish bottom, and I think eventually we'll work our way on up. It's highly dependent on weather. We've had lots of warm weather. They run the air conditioners. People charge their cars at night. More renewables equals more natural gas usage. XOP ripping it to the upside here. This is an inverted shoulder, head, shoulder. We're starting to break and create the other shoulder. Everything's in motion and has good momentum to the upside for that to continue. OIH also ripping. We're getting through this resistance zone. We paused a little bit, did a little retest, and now we're moving on up. Let's hope it can continue. Sprott Physical Uranium Trust still squeezing. There's the squeeze in here. We're trying to get above 1815. Stay above there on a monthly, quarterly close. People are rotating money into URA. They are positioning before the physical metal starts to move, and they have been positioning. So that looks good to continue higher. We've broken out of this wedge type formation. As the resistance starts to become weaker, we're going to start to run. The URA is looking good. URNM's also breaking to the upside here. You can see we just broke today. Look for this to hopefully continue. URNJ also joining in on the mix, breaking to the upside quite dramatically today, 5%. And the juniors, if we're in a big bull market, the juniors are also going to start to outperform here too. Tan still doing its tan things, but overall, guys, big picture view, the way this falls is generally the way it goes up. We're just waiting for that to occur. COPX, the copper miner ETF, right at resistance up here. Hopefully we can break through it. Copper's doing quite well. We'll take a look at copper, the actual physical price soon here. Lithium still on top of its pattern. It's going to work its way higher. It's broken out, and we're going to grind our way on up. REMX in the same position. Great spot for a potential entry point for REMX right here. Looking fantastic. SPX. We're still grinding higher. This was that big interest rate day, kind of a fluke of a day. Is that a fluke, or is that an actual bearish engulfing where we're going to head lower? Not sure yet. We'll have to wait and see what the data brings us over the next few days. NASDAQ also going higher here. Today, we do have a bearish engulfing, a little bit of selling pressure here. Is this a reversal? Let's wait and see. I wouldn't do anything. I think it's still going higher until it does not. Emerging markets. Emerging markets index fund rolling on up. I think this is a fantastic opportunity. I think we've got a long runway ahead of us. When is that going to occur? It's going to occur when the dollar rolls over, yields start to uninvert, and the dollar weakens. Emerging markets are going to take off. This is where the third leg of commodities really starts to heat up. XHB home builders up barely today. Is this going to roll over like the S&P and NASDAQ? We'll have to wait and see. This is a bearish engulfing pattern. We have a weak bounce that generally works its way lower, not higher. Moo also getting the bearish engulfing, and we'll see if we get a pullback here for agribusiness ETF. Copper looking fantastic, breaking out, finishing strong. I think we could see a big move here in copper. We are above the resistance line, so we came up above resistance, came back below it, consolidated, and I think we will rip to the upside and grind our way up. Now, how high is this going to go? I don't know. We could see a big move here. A move that goes from like this is what I'll say. This is a consolidation. This is the move we had last bull market. That is coming. Maybe we go to $20 or $15 in copper. I don't know. It's going to be a big move. Could be $8, $10, $20. I don't know. It depends how big the shortages are and how bad people are willing to pay for it. Iron ore still hanging in there. I still think we're going to go higher eventually. We've broken out of this falling wedge. That is generally a good indication to move on up. Nickel slightly lower today, but again, it's just right on support. Aluminum ripping here. Aluminum looks really, really good for a potential move higher. I like this green. I like this setup right here. Looks like it's going to rip it. Baltic Dry Index also looking ready to rip to the upside. That's going to follow the price of aluminum, iron ore, and all these, copper, coal prices. It's basing out. We can also see that coal is also basing out. This is a return move. This is a consolidation here. We got a breakout for the basing pattern here. Came up, came back. This is your retest move. Very large move. I think energy is going to make some big moves. After this, this is wave one. Wave two. Wave two is the largest pullback in the bull market, in a continuous bull market. And then I think we're going way up to the upside there. Bitcoin, I'm still confused on what Bitcoin exactly is, not from the standpoint of a white paper and what it is from that perspective, but what it actually trades like. Do interest rates move this thing down lower? Is it going to be a fear trade? It hasn't really worked its way through the entire cycle. It was created during the recovery phase of real estate and has only seen one cycle. So is this going to go up or is it going to go down? We'll have to wait and see what interest rates do and see how this thing all functions here. And same with Ethereum for crypto. So that's what we've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you're interested. And we'll catch you guys later. This is Finding Value.